All right. Thank you to everybody who's here joining us today. My name is Lisa Partida with Home Again LA. So tonight's topic, we're going to have talk about this with Bank of California, and today's topic is going to be your spending and savings plan. So just a little bit of like a brief summary. This guide is going to give you basically information on how to organize your income and expenses and how to create a personalized spending plan. So we'll go ahead and pass it along to Tom.
Thanks, Lisa. Yeah, so this is your spending and savings plan. So we're going to talk about spending and savings plan specifically. This one's pretty quick. There's not too many slides. There's like 25. But we're going to talk about in section 1, making a monthly spending and savings plan. So the key takeaway is going to be using a monthly spending and savings plan to guide how you use your money. And this is pretty important because as you'll see, there's going to be some apply it sections that are going to be in the participant guide. But this is going to be an essential part of trying to understand exactly like how much money you have as far as income's concerned and how many expenses you have. I really encourage you to go through your like your maybe checking account statement if you get it in the mail, or if you have the app for the bank that you have, and just go through it and look at the debits and credits that you have. I think that you'll be surprised when you go through and you look at the different things that you're spending money on. So I think it's a good idea to kind of strategize um, so that you can become better prepared. Okay. All right. So the building blocks of a spending and savings plan. So as we kind of briefly touched on it already, the idea of maybe pulling your statements, looking at the app on the bank app that you have to understand exactly how much income you have coming in and how many expenses you have going out. Another interesting thing too is that I think we're used to understanding the income coming in as maybe um, income coming in from our job, but don't forget about those maybe one-time um, pieces of income that can come in. What I mean by that is think about income as being any credit to your account, meaning it could be like a one-time gift that you receive. Maybe you received a birthday card that had cash in it, or the holidays are coming up and you received a gift in that manner. It's really income that's coming into your account. The other thing that you can consider as income too would be something like what if you filed your taxes and you got a tax return? A tax return, money coming back to you from the government, that's money that is going to be a credit into your account. That could be an income stream as well. So consider all the different credits that you have going into your account so that you can understand, as you can see on the slide here, kind of like the scales. And then you're going to balance that on the expenses that you have going out. So any debits that you have going out of your account. The other thing that you could do too is that I don't know if you use a credit card for some of your expenses as well, but anything where you have money going out. So I would implore you to also pull your credit card statements so that you can look at that to see what money is coming out of your account. And what you're going to do is you're going to do an assessment on both of these points to understand where your money's going. I think you might be surprised. I think it's pretty healthy not only to do this maybe on a bi bi-weekly basis, but maybe do it twice a month at first, and then wean yourself down to once a month. I think you'd be surprised to identify some habits that you have that maybe you weren't aware of. So a sneaky one, I know one that people always talk about is like, well, how many times do you go to Starbucks? Starbucks costs so much. But you may identify some things that you can cut back on, or you can find an alternative for. So the name of the game on this one is making adjustments based on the patterns that you see as far as your expenses are concerned. So, and aside from the Starbucks example would be like, well, kind of take into account how many times you're eating out a week. And maybe the adjustment we can make is that, hey, you know what? I'm gonna make the decision to pull back, cut one of those eating out days in that week, and I'm gonna cook at home because I think that you're gonna find that preparing meals at home can be a little bit more cost effective depending on how much money you're spending out. So anyway, the name of the game on this one is just making adjustments based on the behavior that you see on your statements, okay? And then as we were talking about it, this is kind of like the homework that we're going to have as far as after we understand the key terms of what we're talking about within the workshop, the apply it sections and the participant guide are going to be what you use to kind of do that homework. So we'll just briefly touch over it now, but in this scenario here, you're presented with a blank spending and savings plan that has 3 sections. The sections include my net income, and includes and net income being income that you take in after taxes is considered. You're going to have my expenses, a comparison of my total net income and my total expenses. So this would be awesome as we were kind of talking about the idea of pull those statements, pull it from your checking account, pull it from your credit card statement. And then what you can do, I don't have it here, but in the participant guide, there's going to be those sections laid out where you can actually fill out the table. And not only are you going to visually see these items as you have them written down, but you're going to be able to calculate both sides of the coin as we have here on the scales, how much income, how many expenses. So filling out my spending and savings plan, as we discussed, so 3 sections, my net income. And remember, consider anything in this section that's going to be like a credit going into your account in the form of, say, like maybe your payroll, a one-time gift, a tax return. Maybe you receive child support or you receive alimony or something like that, or you receive a public benefit, for example. All of these items can be included under your net income. And then, of course, my expenses. You know, one of the cool things I will say about having an account at a different financial institution, I mean, there's a lot, right? I work for Bank of California, but out there as well, there's Pacific Premier Bank. There is Chase, Wells Fargo, Bank of America. There's so many different financial institutions out there. One of the cool things that I think that you should look into, because one of the things that we always talk about is making sure that you're choosing the correct product for you, whether you're shopping around trying to decide whether I'm going to open up a checking account over there or a checking account over here. Not all financial institutions are built the same as far as like their mobile apps are concerned. Some banks have very sophisticated mobile apps that will allow you to group your expenses in different categories. Why is that cool? Well, instead of looking at my statement at the end of the month that's itemized as one long entry, debit, debit, you know, all the way down, there's going to be some mobile apps at financial institutions that allow you to group like items together, meaning that it'll show you, instead of showing you everything laid out like that, it'll show you how much money you're spending on groceries as an item, how much you're spending money in maybe eating out or food. And that's pretty cool to see it categorized so you don't have to do the calculation for you. So that could be a little bit of an advantage that you'd have in trying to fill out the expenses portion of your plan. And then the analysis portion that we kind of already touched on, right? Let's compare these two things to each other to see what they are. So steps to fill it out. So you have to complete past monthly amount on your savings plan. And this is going to be, and if you've never done it before, that's completely fine. You can actually, we're in October right now. If you want to really get a good idea of what 2024 looked like, you can say, hey, you could even start with just September and then move forward. But if you have those statements and that information available to you, you can start in January if you want, so that you can see what the whole year looked like. We got to start somewhere, right? And then we're going to complete planned monthly amount. Okay. So we're going to fill out to understand what the month looks like so that we can make that comparison and understand what the analysis is going to look like. So we compare total net income compared to the total expenses that we have. And then, as we kind of talked about already, very briefly, the idea of once you see it, you believe it, meaning that you can understand the behaviors and the things that you do often in trying to adjust that behavior and make adjustments and kind of recognize whether or not you need to make changes, because there's only two ways really that we can make adjustments. One, we can go out and get more income to increase our income, to increase our money. But I mean, do you have the time to get a side hustle, a side gig, or another job? Because the only way to increase income is to get another job. But the other way is that we can cut back on our expenses, right? That's another way we can increase income too. Yeah, so then when we do the comparison, my total net income minus my total expenses, we're looking for what the difference is going to be, right? So a zero is going to indicate that your income equals your expenses. Now, I don't know about you, but a zero makes me feel kind of meh. And it makes me feel kind of meh because that means I don't have enough money left over that I can put into savings. And I feel a little meh because, well, it's kind of a positive too, because that means that I'm not in debt or I'm not having to incur debt because I had just enough money to get by. But it's kind of a meh because, well, I didn't have enough money to put into savings so that I could start building wealth over time. And then we see if we have a positive, and I mean, that's awesome, because if we have money left over, that means that we have more income than our expenses. Then you can really start strategizing and understanding, well, how much of this positive income am I going to leave in my checking account as a little cushion? How much money then can I then take out of that I can actually put into a savings account so that I can start building my wealth over time, which is pretty cool. And then the dreaded negative, which is where we're going to have to understand that we're spending more money than we're bringing in. And man, that's the bummer. That is where we really need to understand that we need to make some adjustments. But the only way that you can identify these is that if you're actually doing your plan. So another section of the participant guide for the apply is dealing with Shelley and Walter, and they're coming up with their spending and savings plan. Go ahead and look at this after the workshop, but you can definitely have this scenario be applicable to your own personal experience, your own life. And then they're trying to save money toward an emergency fund in this scenario, but their savings account is actually decreasing every month, which means that their expenses are more than their income and they're having to pull from their savings in order to survive. So look over this. It gives you an idea of how they identify what their expenses are looking like, and the idea of recording the idea, of the spending and savings plan. And in this scenario, when they complete their and they're doing a daily record, which we'll talk about really quick, but they identify that they're in credit card debt. And that is end up being the issue, which is why it's great that if you can do your own plan, you can kind of identify where the shortcomings may be, and there may not be any, and then you can start coming up with a plan to put money away. But anyway, you can record daily ideas or weekly ideas. We kind of briefly touched on the idea that, like, I would like you to kind of readjust that plan when you come up with it the first time on a monthly basis. You can even start doing it daily, like Sally and Walter's scenario in the guide here in the workshop, which is they're recording these ideas on a daily basis. Now, you can also do so on a weekly basis, but in the scenario, they identify that they have credit card debt. So their idea just to do something different daily is to start collecting change that they have around. And I mean, that could be done, right? And then if you want to think about it maybe on a more weekly basis, you have the envelope system as being a means of savings. If you have a little bit of extra money saved around, put $5 in an envelope, promise yourself that you won't take the money out for something else. And then you can do a weekly money check-in to see how much money you had. I mean, the idea is pretty similar to having a savings account and making sure that you're putting money into that on a monthly basis. Yeah. So we can also extend the thought out to having it be monthly. And like I already kind of told you, this is what I kind of like. I would conduct the monthly review, even if you already have an established plan. And the reason that we do that is that your goal setting can become different as you grow over time and you identify new behaviors that you have. The other thing that you have to do, which is something that I don't want you to forget about, is to celebrate successes no matter how small they are. You need to pat yourself on the back, because one of the hardest things that we have with anything in our lives as human beings, and it doesn't matter if it's our finances, it doesn't matter if it's our health, it doesn't matter any aspect of your life, the hardest thing for every human on this planet is starting. Anything. Starting is the biggest battle. So don't forget to celebrate the successes. And we kind of already talked about this already, the idea of what can we do when we identify in our plan. There's only two things that we can do. We can increase income by bringing in more money and getting another job or a side hustle. The other thing too, we can sell something around the house, have a garage sale. One of the things that I got to take stock of or inventory of and what I've got going on is that I probably need to go through my closet and kind of look at whether or not I wore like a pair of shoes. When's the last time I wore that pair of shoes right there? I need to do that. I got like at least two pairs of shoes I know that are in my closet. Not that I have a big collection at all, but I could I don't even use those. Maybe I'm gonna go donate those, or I can maybe sell them on eBay, things like that. And then of course it's time bound as well, where we have to think about things in, are we going to do this once? Is it going to be an occasional thing? Is it ongoing, like a part-time job, things like that? But the only way to increase the income is to get more money in, right? And then the other way to increase the income is to identify those things that we can decrease expenses on. So conserve. What can you get for cheaper? One of the things I always bring up to get cheaper is when I talk about when I used to go buy Old Spice body wash at Target, that was, I think, like $6 to $8 a bottle. I just go buy it at the dollar store now for $1.50. I don't need Old Spice. I, I get clean the same way no matter what. So I can conserve that way and making sure that I'm not buying name branded things, where when I can just go to the dollar store and get things that work just as the equivalent. And then don't forget to make the adjustment, right? Make that adjustment, go to the dollar store, get that other item, or completely eliminate it altogether. And then in the participant guide, this is a way to harken back to that initial one where we had Shelley and Walter in identifying their spending and savings plan. And this is in the participant guide, this try it section is to what do we do to make adjustments, okay? Yeah, so the monthly spending and savings plan is a guide, okay? But the only way that we can implement this guide is to actually write down the plan. And as you saw, income expenses, identify those to your statements, and then you'll be on your way. So when money is short, prioritize which bills to pay first when money is short. So how does it happen? Even with careful planning, you may not even have enough money. And then you can see from that Sally and Walter situation, they noticed that their savings was decreasing on a monthly basis. Well, that's because they had to pull money from their savings account just to keep up with their lifestyle, to keep up with what was going on. After doing their plan, they realized that they were in credit card debt. So even with meticulous and careful planning, you can't anticipate every stumble, every hurdle, every roadblock that'll be on your path, right? So we need to come up with further planning, further things that we can do to make sure that we're well suited just in case things come up. And here's the idea. We already talked about increasing income. We already talked about decreasing expenses. One thing we haven't talked about, contact creditors. If you are in debt and you're having trouble making your payments, those folks on customer service lines, those folks that work in bank branches, they're there to help you. You have to understand that the financial institutions that lend you money want the money back. And they want it back under all and any circumstances. Meaning that if you can't make your $155 credit card payment, negotiate with the credit card company to decrease that amount. Because they're going to get their money. They would much rather receive some type of money than no money at all. So reach out for help when you need it. One of the things we always talk about in these workshops is making sure that you have a good relationship with the people that work at your local bank branch, because you never know when you're going to need to call that branch manager and you're going to need some help. And then the last thing is prioritize what to pay first. Okay. And I don't want to get to the complete negative end of the spectrum in trying to come up with a scenario or an example. But like, are we going to pay our utility bill to keep the lights on as a priority over maybe skipping a credit card payment or something like that? So you have to prioritize kind of what is going to be the most important thing in your current situation. Everyone's different. Everyone's going to have different priorities, but you're going to be able to make this prioritization kind of based on, where you see yourself in life right now. So you obviously don't want to jeopardize your shelters we talked about, right? So would we rather prioritize making sure that the lights are on and be late on a car payment? You need to prioritize things that aren't going to impact your health or your ability to make sure that your family's taken care of. And when I say this, I mean this on a daily basis, on a weekly basis, on a monthly basis, and then stretched out for the whole year. You're going to have to prioritize these things. And the other thing is, we saw in Sally and Walter's example in section 1, it could result in a loss of assets where you're pulling from savings just to stay afloat. So, make sure that you're prioritizing correctly. And there's definitely ways in prioritizing your expenses. And in this, apply it within the workshop, which within the participant guide is trying to find ways to increase income or reduce expenses, as we kind of already talked about. One of the things that you're going to find in this section is not only reaching out for help in the idea of making sure you have a good relationship with your financial institution at your local branch and reaching out to creditors, but the other cool thing that I think some people are completely unaware of is that there's nonprofit organizations out there, and then you'll see it in this section, that are there to help you too. There's nonprofit agencies that have completely free services. They have credit counseling. They have home buyer workshops. I would implore you that if you are in need, if you are stressed out, if you need help, go to open up Google and search credit counseling in my local community or something like that. Credit counseling in Los Angeles County. There's a lot of nonprofit organizations that are there to help you that will not charge you a dime. And these folks are professionals. They have all the expertise in the world to help you. So help is out there and it won't cost you anything. Yeah, so as I mentioned, this one was kind of a short one. We're already at the end. I think maybe the key takeaway from it all is going to be starting. It's like, where do I start? And then when I identify when I'm going to start, the idea of sketching out the plan. And the only way to sketch out the plan is to utilize the tools that you have at hand, which is going to be that checking account statement, that bank app on your phone or your tablet or access to your account online, pulling that and then going through the participant guide, filling out my plan. And the way, and this is going to be so awesome, not only to figure out whether or not you're, remember, zero, positive, or negative when you compare both sides, but it's going to allow you to identify behaviors that you have that you can either make an adjustment to or that you can completely eliminate. You know, look to see how much money you're spending at fast food. Look to see how much money you're spending at the grocery store. Identify, well, maybe instead of going to Bonds for all my shopping, I'm gonna go to Aldi just to buy certain items that I know are a little cheaper. When we start being able to make these little micro adjustments, they really can make a large impact, not only in the short term, but as that will compound over time and put more money in your pocket. Okay. So that's kind of my spending and savings plan.
All right. Thank you so much, Tom. I know I was actually going through my bank account while you were discussing all of this, trying to look at what, you know, how it tells you like how much you spend, like how much you're deducting from your account versus how much you're inputting. So I was like, oh,
Yeah.
okay. A lot of expenses. We gotta cut back.
Right. Yep.
Yeah.
Just identify those and come up with some strategy.
Mm-hmm. All right. If only it would give me categories of like how many times I go to Starbucks per month.
Yeah, I know that would be useful. We can
Yeah.
always come up with other tools and other apps that have the ability
Yeah.
for you to import your statement so that
Mhm.
it'll do it for you.
That'd be cool.
But it's out there. Yeah.
Okay, cool. All right. Well, thank you so much, Tom. I'll
All
see you
right.
next time.
All right. Thanks,
Okay.
Lisa. Good night.
Good night. Bye.